Yesterday's oil dynamic was rather weird. The quotes first went down, coming close to the level of $105 per barrel, but then suddenly jumped. As a result, oil prices settled above $110 per barrel again, and such a sharp increase can be attributed to the G7's idea to form a cartel of oil buyers to help limit prices. Notably, US Treasury Secretary Janet Yellen just announced the idea without providing any details. She also added that it would be quite difficult to implement this plan. What's more, now the European Union will hardly place embargo on Russian oil, as this contradicts the idea of oil prices regulation. Janet Yellen emphasized that the purpose of the cartel is to set a price threshold for Russian oil. Since there is no embargo, Europe will have every chance to avoid a fully-fledged energy crisis. At the moment, the market is trying to calm down, expecting a further development of the situation. Now, a lot depends on how the G7 countries will promote the idea of a cartel. If the majority supports it, the European currencies are likely to gain in value, as it's the US dollar that will be hit more than other currencies. The ongoing rise in European currencies could be mainly explained by the UK retail sales report, although the indicator declined by 4.9% on a yearly basis after a 1.3% rise in the previous period. The drop was less than expected. Economists had foreseen a slump of 8.4%. In other words, the UK consumer activity is not as low as anticipated. Let's take a look at the trading charts. After a small pause near 1.05, the euro-dollar pair resumed its upward correction. As the result, the pair returned to the upper limit of the range of 1.05 and 1.06. Under the current conditions, the price may bounce off 1.06 to 1.05, thus forming a flat. The pair is likely to go on climbing if it consolidates above 1.0636 on the 4-hour chart. Meanwhile, the pound-dollar pair failed to settle below 1.2300. The pair did not allow the US dollar to recoup losses and approached the resistance level of 1.2500. Against the backdrop, the volume of short positions will increase only if the price settles below 1.2300 on the 4-hour chart, and this may cause a further drop in the pound-dollar pair towards the local low of 1.2155 recorded on May 13. The alternative scenario will become possible if the price returns to the resistance level of 1.2500. In this case, the pound-dollar pair will get a second chance to prolong its upward correction. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.